Welcome back, and in our top business story, Dubai hotels continue to see high occupancy levels as the hotel market saw an 86% occupancy rate in the first half of the year. That's according to a report by Hotstats. Dubai's hotel market led regional markets in its June performance as occupancy climbed 3.6% to 79.2%, according to the report. Average room rates were up 6.2% to $207.49, increasing revenue per available room by 11.2% to $164.22. A boost in food and beverage revenues increased total RevPAR by 7.3%, which helped profitability to go up 12.2% to $90.37. The month before also saw an occupancy rise in Dubai hotels. Hotels achieved a 5% increase in occupancy to reach 83.2% in May, compared to the same time a year ago, while ARR was up 12.1% and RevPAR rose 19.4%, according to a report by global consultancy firm Ernst & Young. Meanwhile, Abu Dhabi hotels have performed well in the last 6 months, with demand up 13.4%. Emaar Properties have issued a termination notice to the defaulters of its downtown Dubai development. Those who have not made instalment payments on their units now have 30 days to do so. The notice is in accordance with Law Number 13 of 2008 as amended, and its executive regulations administered by the Dubai Land Department. The notice further went on to say that the DLD shall take the necessary legal proceedings pursuant to clause number 11 of the law if the payment is not made. An Emaar spokesman was quoted in a local daily as saying that the notice is standard procedure. The spokesperson added that Emaar has among the least levels of default in the industry. Emaar recorded a net profit of 675 million dirhams in the second quarter of the year, while revenue reached 3.11 billion dirhams. Some of its developments include Emirates Hills, Dubai Marina, the Meadows and the Springs. Deyaar Development PJSC announced in a statement released on Thursday that it has registered an increase in consolidated net profit in the second quarter of 2013, grossing at 27.3 million dirhams, up from 18.6 million during the prior year period. The statement added that the company's net profit for the half year climbed to 46.7 million dirhams, as compared to 28 million for the first half of 2012. The gross profit achieved totaled 140.2 million dirhams, as compared to 108.7 million for the first half of 2012. Deyaar's shareholders' equity stood at 4 billion dirhams, while total assets reached 6.3 billion. Speaking about the results, Saeed Al-Khattami, the chief executive officer at Deyaar, was quoted as saying that our financial results of Q2 2013 reflect renewed investor confidence and positive market sentiment. We are glad that our strategy to leverage the improving market situation with our offering of unmatched real estate options has paid off and helped us capture a significant increase in market share. Deyaar, established in 2002, oversees 15,000 property units across the UAE and also provides facility management services for its portfolio of more than 18,000 commercial and residential units. Tabriz, the world's largest district cooling company, reduced debt and increased profits by more than a third in the second quarter of the year, in spite of lower sales. Net profit at the company, which is partially owned by Mubadala, increased 37% to reach 79.4 million dirhams during the 3 months from April, compared with the same period the previous year, while group revenues fell 6% to 278 million dirhams. Tabreed, which provides chilled water-based cooling to buildings and developments, such as the Dubai Metro, said the reduction in revenues was part of its long-term strategy to wind down its less profitable non-core businesses, such as pipe manufacturing. Revenues for Tabriz chilled water business increased 4.4% over the first 6 months of the year compared with a year earlier, to reach 464.8 million dirhams. 46,000 refrigerated tons, an industry measurement of new customer connections, were added across the region. Last December, the company issued a 1.13 billion dirham convertible bond to Mubadala, which gives Mubadala the option of increasing their ownership in 2019. In February, Tabriz shares fell after the company announced that it planned to issue further convertible bonds to Mubadala, which already owns 14.8% of the company.